this energy crisis now is clearly a blow to consumer sentiment. It's certainly going to drive up inflation. The question is by how much? We did expect a recovery. Now the recovery will at least be postponed.
The past 3 years have not been kind to the German economy. There were hopes for a slow turnaround beginning this year, but then the war in Iran began. I spoke with economist Clemens Fust at the Ifo Institute in Munich about how much the outlook has changed in just the past month. I began by asking about his latest business sentiment survey, which showed more pessimism, and I asked whether higher energy prices were at the core of that bad mood.
Yes, it is. It's not only energy, but that's the key issue here. In the survey, we see that energy-intensive industries like the chemical industry, the metal industry, suffer a lot. What companies are telling us is that their current business is going okay still, but they expect trouble for the coming months. And it's especially the energy-intensive industry. It is also, of course, tourism, because there is the Gulf region. There is some tourism in this region, but Dubai obviously is also a hub for travel to Asia. And it seems that many people are canceling holidays, or at least that's the expectation, maybe also because of rising prices generally, a hit to affordability. But it's clearly the Iran war, and it is energy and its implications.
We've been talking about the energy-intensive industry in Germany for years now. Things haven't been going well because of structural changes to the economy. What does this current crisis mean in that broader perspective? Does this make a bad situation worse? Could it be existential? Was it already existential? How would you put it into perspective?
Yes, it does make a difficult situation worse. The energy-intensive industry in Germany is currently operating at roughly 80% of the output it had 6 years ago. Of course, energy-intensive companies have learned to deal with difficult situations also. So they are accustomed to these issues. At the same time, it's another hit for an industry that is already weakened. Maybe the difference this time is it's just not Germany or Europe. It's a worldwide issue. And that makes things a little easier, because if energy-intensive companies are competing worldwide, and if the whole world is hit by an energy shock, that's better than being hit by an energy shock while others aren't. That's the upside, so to speak, but it's a difficult situation.
Correct me if I'm wrong, but I believe that we had started to see some uptick in consumer sentiment in Germany in 2025, at least, pointing to perhaps early signs of, I don't know if you'd call it a recovery, but it seemed positive. Does what's happening right now sort of put the brakes on something that was a positive trend?
I'm afraid it does. Yes, there was a positive trend in consumer sentiment to some extent. This is driven by wage growth. Real wages are rising, have been rising in 2025, and that has supported consumer sentiment. And this energy crisis now is clearly a blow to consumer sentiment. Companies from the retail sector are telling us we expect consumption to slow down. So that part of the recovery is at least postponed.
We talk a lot about the relevance of fuel prices, gasoline in particular, for the U.S., where supposedly it can decide elections. What can we say about Europeans and Germans? Are they not a bit more insulated, perhaps, because there's so many aspects to fuel prices here that governments could take away? There's public transport that's better built out, perhaps even better fuel standards. Is there more elasticity when we look at, on the consumer level, the exposure to fuel costs?
First of all, Europe and Germany is certainly less exposed than the US. This is related to the different taxes we have on gasoline. So gasoline is more expensive generally, but an increase in the oil price relative to the rest has a smaller impact. And at the same time, there is more public transport. That's right, distances are smaller, so the exposure, yes, is smaller. How about the elasticity? It's probably also bigger because there are more options due to public transport. At the same time, it's still a very salient issue. So people, even if they're not interested in economic policy and economic issues, they see what the fuel cost is. So it still is a political problem if fuel prices rise.
And then what about diesel? That seems like an area where Europe in particular is vulnerable. Does Europe's dependence on diesel now look like a bad idea, or could it make the hit even worse?
I wouldn't say there's a big difference between diesel and other types of gasoline. But of course, yes. I mean, the it would be better if we had more transport based on electricity, for instance. But I don't think that diesel versus other types of gasoline is a problem.
You talked about the taxes on fuels, for example. Obviously, businesses are especially vulnerable to fuel costs. What does this mean for inflation? What does this mean for the cost of goods? Europe is already coming off of an intense period of inflation, just like a number of other countries.
Yes, it's certainly going to drive up inflation. The question is by how much. This very much depends on the duration of the conflict and the duration of the supply disruptions. We have looked at various scenarios, all of them still relatively benign, like the war ending in 2 or 3 months versus the war ending earlier. Bad enough, but still maybe more benign scenarios. And if that happens, we would expect inflation in Germany to go up to maybe 2.5%. It could rise next year as well, because some of these price effects will show up later. For instance, fertilizers get more expensive, and then food gets more expensive. This takes some time. It would be really bad if the war escalated further, lasted longer, if more of the energy infrastructure was destroyed. So that could drive up inflation further. And that's a big risk, because what do the central banks do then if they decide to fight inflation? They raise interest rates and make the downturn worse. So there are some hard choices here to make.
Governments also have hard choices about how they respond to this current crisis. We've seen that in countries like Spain and Italy, they've cut certain excise taxes and fuels. They may be offering more fiscal packages to try and relieve some of the support. In Germany, we see that certain measures have been taken to try and slow price rises at gas stations. As an economist, do you see any one direction as better than another when it comes to trying to take some of the pain away right now?
I suppose as an economist, if the decision is taken politically to target certain groups and ease their pain, what we would like to see is measures that don't bring down prices. Because if you reduce fuel prices directly, you reduce incentives to save energy. So what's preferable is measures like increasing commuting allowances in the tax system. So give a bigger tax deduction for commuting. Because this doesn't reduce incentives to save fuel, maybe to use public transport, but it does help people who have to live with a long way to work, who have to commute very far. So it would be good to try and preserve the price signals.
Speaking of difficult political choices, you've written a lot, and Ifo has commented a lot about the use of debt-raised investment funds in Germany in its budgets ahead. We've talked about this before as well, the criticism coming from your institute and yourself that Germany is spending too much of this money, which was supposed to be used for structural investment, on consumption. How does it look right now? Have things gotten any better since last year when this issue really first came about, or are we still sort of at a critical juncture?
We just published a study looking at the year 2025, and there things look pretty bad. So what's happened is, yes, the money in the new infrastructure fund is used for infrastructure investment, but in the core budget, investment spending has declined. So investment has been shifted to this fund, and overall investment practically hasn't increased, but we have increased debt, and that means the additional debt in the end effectively has been used mostly for consumption. This is only the start of the infrastructure fund. So what's been spent is just under 25 billion out of 500 billion. So the government still has the opportunity to improve things. And it's really very important that they do, because if they don't, we will have higher debt, higher interest payments, but still a rundown infrastructure. That would be very bad.
You have your spring prognosis coming up for the economy. How difficult is it as an economist looking at what's going on, the acute pain right now from rising energy costs, but then also some of these structural issues that you were talking about? Maybe you can give us a sneak preview of what are some of the issues that you see for this prognosis?
Yeah, it's difficult to do forecasts in an environment which is characterized by so much uncertainty. So what will be the duration of the war? Nobody really knows. It's very hard to predict that, but a lot depends on it. So what we do to deal with this is look at different scenarios and be open about the assumptions we make. So the scenario assumptions like, let's assume the war will last 3 months. What are the implications for fuel prices? And from that, on the basis of that assumption, we come up with a forecast. And if we make different assumptions, the war lasts longer, then it's a different forecast. So in this case, it's best to be transparent and present different scenarios. Sometimes it is possible to pin down some factors suggesting that one scenario is more likely, then you can call it the base scenario. But I think we have to be transparent about the fact that we don't know the future. We can only look at scenarios.
Just to sum it up, one last question. 2 years of recession, 1 year in which we've seen virtually stagnation. What does 2026 hold for the German economy? Is it a recovery? Obviously, you've just said that it depends on the way things go to some extent in Iran. But what could we say? Is there no clear outlook ahead then?
2 months ago, the mainstream view was, yes, there will be a recovery. Unfortunately, one driven mostly by public spending and not by the private sector. But we did expect a recovery. Now, the recovery will at least be postponed. It's not clear that it will falter altogether, but it will be postponed, and that means the recovery in 26 will be smaller. Maybe hopefully we'll see more of it in 27. But there is clearly, for the time being, there is no upswing.
All right, Clemens Fust, president of the Ifo Institute. Thank you so much.
Thank you.